Warning: this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Hi, Andrew. Thank you for being here. I really appreciate it. And I am looking forward to seeing what you've got to present today as a cycle trader. So, I mean, if you want to plug anything, Twitter or anything like that, please feel free. And if you want to introduce yourself.
All right, awesome. Well, thanks for having me. I appreciate being on here and getting to share my ideas with your audience. Andrew, my @ on Twitter is at Gold and Guitars. And so I thought since that's my name, I would kind of share something that I've been following for the last year or so as it's been developing. So this is the GLD to SPX chart. I have GLD divided by SPX just to see where the trends are moving. So we can kind of see that if you look at the years back since we had a big gold top at the end of 2011, SPX has just been absolutely destroying gold. And here we have a significant point to me because it looks like we finally made a higher low. So I have my cycle counts on here. So normally they're around in the 30s, 40s. Occasionally we get shorter ones, but it looks like we finally made a higher low. And what that suggests to me is something that you've been talking about, Camel, is that we're about to see a big change over the coming months in what is getting value from the stock market overall, where money is flowing. So we've had this higher low here on month 26. And so what you can just expect is that in comparison to the SPX, gold is going to be doing quite a bit better. We had this massive downtrend and we finally got the higher low here. In the short term, I've been looking at this on the weekly chart as well. And so this is where that big low was. And we've had 1, 2, 3, and 4 cycles. And we have this candle that's kind of stalling here right now. And so it's possible that the back test of that monthly low, like, that in cycles, we always expect after we get a low, whether it's a daily cycle low, a weekly cycle low, or a low on the monthly chart, there's going to be a back test of that low that comes at some point between, say, months on a monthly chart, month 5 and 10, on a daily chart, day 5 and 10, weekly chart, week 5 and 10. And so it's possible that this is an early back test, or it's also possible when we look at the weekly cycle chart here that maybe there is still one more decline to come into weeks 32 to 34. That 32 to 34 being kind of an average, a typical count that you might see. We have longer ones, we have shorter ones, but around 30 weeks is fairly typical. So that will lead us into mid-September, maybe into October. So once we get that, once this back test, maybe it's this one here, or maybe there's another low, once that low is coming in, then we should really expect that gold is going to do quite a bit better than the stock market in general, which is kind of a big change, a very big change that most investors would simply not be ready for. But that's still weeks and months away. We still have our current cycle with SPX that we're looking at. Like, has it topped out yet? Is there more upside to come, or has it already topped out? Because we saw a pretty significant decline that started in mid-July. So that's undetermined yet, whether there's one more move up. I do favor one more move up, but we'll have to see what happens.
I also favor one more move up, at least for now. But we're going to find out, I guess.
Yeah. Yeah, I have the chart here. So this is my weekly chart on the SPX. So the way that I've been counting the weekly cycles is not the same way that everyone always counts their weekly cycles. If we think about the way that a daily cycle works out, we get our daily cycle low up to a half cycle high, down to a half cycle low, up to the daily cycle high, back to a daily cycle low. And so the way that I've been thinking about these weekly cycles, even though traditionally week 22, that's the timing band for a weekly cycle low. Week 25, that's the timing band for weekly cycle low. If we treat these cycles as having a half cycle high, half cycle low, weekly cycle high, weekly cycle low, with a break of the trend line being the confirmation, then it seems probable that that's what we're getting over here as well. A half cycle high, half cycle low, a weekly cycle high, down to a weekly cycle low. And some people would object, saying that 41 weeks is too long, but there's lots of examples of weekly cycles that are in the 40s. We have this one here. It's kind of hard to gauge. We have the low in either here or here. We could argue about which one's the low, but obviously this was not a low because it immediately failed. and we have this one here. We could argue that maybe this was a low here, but if we take the idea that this was a half cycle low, well, then this is the full low at week 42. And so cycle traders love to argue about their counts. We could get into that kind of argument about what count is correct and what's the correct way to do it. The correct way to do it is the way that the market decides is what's right. So we can argue with each other, but we can't argue with the market. So my idea here is simply that we're getting a weekly cycle low likely here on week 41 that has every chance in the world to make one, whether it's a slightly divergent higher high or a substantially higher high into maybe, like, everyone likes the $6,000 target. So it goes up to, if it's going to get hit 6, it probably hits 6,100 because they don't normally just stop right at a round number. But that's kind of what my take is. And if I'm looking at my TSI, I'm just as oversold, or maybe even a bit more oversold now than I was at this week 25 low. So TSI tells me that this has potentially more room to run, but that's an idea. And that idea could be wrong. And then it just wants to go further oversold, because often when they get oversold, it's like, when did we get oversold? Well, you might say we were oversold right here in March. But guess what? There was another a couple bounces up, but another, I don't know, 12-13% of downside before the bottom actually came in. So it's not unreasonable to say that we're going to bounce up a little bit, and it's gonna break this trend line and head lower towards a 4-year cycle low in 2026. So we'll have to wait and see, but I definitely prefer the potential for upside here.
That's super interesting to me that you use a longer count, like two counts. But looking at it from this perspective, it actually makes quite a lot of sense. I can see why you do it now. I would never have thought to do it that way, but now I'm looking at it, it does make a lot of sense.
Well, I mean, I'm not going to say that was my idea to look at longer counts, because what I have always tried to do is listen to what smart people have to say and try to incorporate their ideas. So one of the other cycle traders that I've learned a lot from on Twitter, his name is Erlovsky. He was the one that originally proposed a couple longer counts here, and then I just kind of ran with that idea. And now, if we're looking at a longer count, then it makes sense that we might see some further weakness into October. But if we can if we're looking at a regular count, you would say, well, 25 and then another 23 or 24 or 26, and that's bringing you into October.
Yep.
And there'd be some logic behind that as well, because you put that on there and you drop it into just before the election. And so the election is resolved, and all of a sudden, there's clarity. People know how to invest, because any active manager, they probably have a playbook ready for if Kamala Harris wins, or they have a playbook for if Donald Trump wins.
Sure.
So it would make sense based on that reason that it drops down into an ICL, say, in October, which would really be the standard way of measuring these cycles. But I just don't think that that's how this is going to work. But I could be wrong. And something that would support that potential idea would be actually that the gold to SPX ratio, if I can find it again, where I put it. I'll just open the other window.
Yeah, sure.
So if the back test is going to come in the normal timing band, you would expect it to be, like I said, 5 to 10 months. So when does gold or SPX outperform gold? Well, it's not on the way down, because if you think about COVID, there was on gold, and during that COVID shock, gold dropped 15%, but SPX went down how much? 30 or 35%?
Something like
in
that,
theory,
yeah.
Yeah, so in theory, I don't know if that's true for all of these downtrends and uptrends, but in theory, if gold is going to underperform, that's because SPX is overperforming. So perhaps that's another potential sign here, is that this weekly cycle on this ratio does want to come and give us one final low here into, I don't know, September and October, and that is a point in which SPX is outperforming gold.
Yep.
Kind of what I think is going to happen.
That makes a lot of sense to me. That makes a lot of sense to me for sure.
Yeah, where is my weekly cycle count on gold? So I have this as being potentially a very strange ICL. So I got to find that count now. Just give me a second here. Where is it?
Yeah, I've been hoping and praying I get one final low on gold, because it just doesn't have the right feel to me, based on my experience, that it wants to move higher just yet. So I think silver is starting to show what I was expecting to see from gold, and including the mining ETFs as well, the junior miners and the senior miners. They're all starting to look like they're hunting perhaps a weekly cycle low, but gold is kind of trading up in this tight range. So it's been a
Yeah,
little bit of
I
a
need to
tough
take
read
this
for
off.
me.
Yeah, so this is my, I guess I'll go to gold first. Excuse me. This is my daily chart for gold. Like I told you before, I was kind of redoing some charts, so some of them are a bit of a mess, but this one I've cleaned up. And if we take our ICL in February, and we have 1, 2, 3 in daily cycles. This one is kind of strange. This might be a short daily cycle, or maybe this is a long daily cycle. I'm not too sure, but that doesn't necessarily matter all that much. We have here, which is what I have is this likely weekly half cycle low. So again, if we're looking at cycles, a half cycle low makes sense that it would show up somewhere around week 16 to 18.
Yep.
And so that low, I think, was this one right here on the weekly chart. So that's week 16. And so if that is the case, then this could end up being an intermediate cycle low right here, because we've got this intermediate inclining trend line that we've now broken, wicked below, and set at least a daily cycle low up here, and we've gone up and we've back tested this low on that should be day 7, I believe, day 6. So that's in the timing band for the back test of a daily cycle low. So the question is it possible that this was also an intermediate cycle low? Now it looks awkward, and normally you wouldn't expect it, but in a bullish cycle, in a bullish daily cycle sequence, you would expect to have your daily cycle low above your half cycle low. So in that sense, you might expect to have your intermediate cycle low above your intermediate half cycle low as well. So it's kind of an awkward looking shape in that way. But it's also, so before I traded on cycles, I used technical, like standard technical analysis, and like this is just kind of a rising cup and handle shape, which is pretty bullish.
Yep.
And if that's to play out, it gives you a measured move of around 2,600. If you just take the measured move kind of like this, add that to what would be the breakout line, say it breaks out here, 2650, 2660 would essentially be the measured move. Now, one of the reasons I'm not just a technical trader anymore, that I use cycles, is because those shapes fail. They don't reach the assumed target all the time. So I adopted strategy because it's more reliable from my experience. It doesn't mean you throw away old ways of looking at charts, but it's just you put it in the toolbox with the other ones. So I think that this could be an intermediate cycle low. And if that were the case, then I would be expecting a left translation, and we get one more kind of move up to, we probably get a daily cycle from here at 35 or so days, going into mid-September, get your next DCL, and it's a higher one. And then you would left translate your second daily cycle here. And that's, I've been talking about the late end of September, beginning of October for a while now. And I mean, I don't want to say like that's definitely going to happen, but like that lines up very well right there. If this were to be a strange intermediate cycle low, and we top end of late September, I've been looking at GDX. Here's my GDX daily count. This one I think I actually have complete with weekly cycles as well. Yeah, a weekly cycle count here. So this is only week 23, but week 23 is certainly late enough for an intermediate cycle low. It was right here as well. We had our low back in 2022. A nice right translated cycle, left translated, and then down. And so I think this is a higher low here. I can't remember, but they're pretty close to each other. So, I mean, if we extrapolate that kind of move here, so we have a 23 low, and we have another move up into a left translated cycle up until the end of September. Like, how many weeks was this from here? This was, top was week 8. So week 8 weeks from now is the end of September. Right?
Yep.
So that's kind of frightening. So you can imagine that. So if we go back to the ratio, so we look at gold against SPX. So this is not the one with my count on it. Weekly cycles, here we go. So we have gold going up, SPX going up faster, declining here, and then you get the top in SPX, and then both are going down, but gold does not go down as fast as stocks. So gold is breaking out here. So I mean, that makes sense to me. That's my opinion, quote unquote, is of what's going to happen, but it doesn't mean it has to happen. It's just kind of a little math I'm putting together in my mind and expectations I'm giving for what we're going to see.
I think that makes
So
a lot of
time
sense.
will.
I think that makes a lot of sense, especially if we make the assumption there is another leg higher in the stock market, and then something kind of breaks
Mhm.
and forces a more severe top, at least a short to medium term local top. It makes sense, especially given the pullback we just had. We saw people dump in the metals on the day as well, because obviously in crashes correlations 10 to 1, right? So it
Yeah.
makes a lot of sense to me that if we just make the assumption there is another move to the upside and then something kind of goes bang and we see a more severe pullback, it makes sense that people would dump liquidity, would dump gold to generate liquidity, and therefore it would sell
Mhm.
off with the stock market. But then again, at the same time, it also makes sense that it wouldn't sell off as severely because it's a risk off asset, not a risk on asset.
Yeah, that's right. And if I flip this to the monthly chart on GDX, so this is what I have for counts on a monthly time frame. So we're going to start with the global financial crisis, and that's where I took a count from here to there, which was 28 months, which actually kind of correlates with a lot of other timing. But normally you don't. The chart starts here. I don't really consider that first cycle very often. But anyways, we have roughly 32 months. Let me condense this a little bit so it's easier to see. We have a half cycle low at month 16, then a low here on 32. If we look at this on the weekly chart, this is a more clear intermediate cycle low. And as we go through this, you notice that 27 to 32 months is kind of what you're looking at. So it's kind of an awkward low, but it's immediately in higher. So we know it went higher. So we know that there was a low because we went down, broke below a low, and then went higher above previous highs. So this was just an immediate, pretty well failure immediately. So it was a legitimate low. And so we go from here, we get a half cycle low at month 11, down to a low in month 30, then a half cycle low in month 11 again, and then a low into month 25. We go over here, and this one's kind of a bit of a mess, but this candle is week 16. This is more like the back test of this low, but it just doesn't get any momentum out of this low. We had a big, strong move for gold miners and silver miners, and if you look at silver miners back then, they were incredible. They had an amazing move.
Yep.
So this was the main low, and then we come to another low here, a left translated for this overall cycle into month 32. And then we get COVID shock. Gold goes down 15%, but gold miners, they go down, let's see, 50%,
Yep.
which is, or 48%, which is what you expect. Like they're going to get crushed in comparison. And so it's funny because week 18 would be roughly your half cycle low.
Mm-hmm.
And from there, we get a left translated cycle that leads into the top in August 2020 when everyone was super bullish, of course. And then we came down here into the fall of 2022 when everyone was screaming that gold was going to zero. And that was month 30. So if we take that count, it's a little bit rough, but we have 32, we have 30, we have 25, we have 32, we have 30. Then, well, what's our expectation based on the monthly chart? As we have an expectation of 29 is February, 28 is January, 27 is December. So if we want to cast a wide net, you might say weeks 27 or months 27 rather in December through potentially April or maybe March. December to March is what we could say. But if we include our weekly cycle analysis, and this is why it's important to look at, monthly, weekly, and daily as well, we would say if this is going to be an intermediate cycle low and we need to wait for confirmation of that, then we can start counting because there's a very good chance that the next intermediate cycle low is going to time that next low on the monthly chart. So when does that next one happen? Well, if this is the low here, we'll go out and let's just say 24 weeks. And where does that bring us? That brings us to January. So it's not, and that was, I think, on month 28 or 20, I can't remember. Yeah, so month 28, and if it goes a little bit longer, it's month 29 in February.
Yep.
And this year, our low was that we blasted off was from February. So we could see that we could go a little bit higher here, maybe fill part of this upper wick here into this move, and then we decline. And then are we going to break this? Actually, this needs to be lined up a little bit better, but maybe we break this trend line into January, between that January and March of 2025 area. and then it's time to kind of load the boat on gold and silver miners.
Yeah, that makes a lot of sense. That makes a lot of sense.
Yeah. So I'm sure what a lot of your followers are most interested on is crypto. So
They are really into gold and silver, some of them as well. So I know they're gonna
well, that,
really appreciate this.
yeah, I'm sure they're most interested in making money. So
Yeah.
that's what's most important. What's the market doing? Let me come along for the ride. So it's always most important when is to determine the greater direction. What is the trend of what's happening? So I always start with a monthly cycle chart. When you're learning to be a cycle trader, it's tough because there's a lot of nuances, but generally speaking, you want to use. I would say if I was learning, I would tell myself just to look at main indices and try to find the trend in there. So in the SPX, around 37, 38, 39, 40 days, something like that, with a possibility going on the other side. A lot of individual stock names, you can get wild variation. Like you could see a 32-day cycle followed by a 64-day cycle. Like they're just, it's much harder to do on individual names. Anyways, so with knowing that we should start with a monthly chart, well, here's our monthly chart on Bitcoin. And what we'll notice if we look closely enough is that in the monthly chart, we have our main lows, are essentially our 4-year lows. I don't have them all marked off here. But if we start back here, so this is the beginning of time. We have a half cycle low of the 4-year cycle at month 23. And then I believe right here is about the 4-year cycle low. Now, these first cycles here on Bitcoin, like I said before, it's hard to measure from your beginning because the beginning is you're going to get a first bottom. And so this was 23, and which is, if you consider that the length that we talk about is say in the mid to high 40s, then actually week 23 coming at a high at the low at month 23 rather, that's almost cycle inversion right there, because that would come at the timing band of the half cycle low of that 4-year cycle. So we got a low here that we can use for our count. We come up here. We got, I believe this is low here. I can't actually remember.
I think it's the first one.
But one of these two, the first one.
I
So
think
here
so.
we have, yeah, month 38. We go over here, and we have 44. Maybe it's the second one.
Oh, maybe it is the second. Yeah.
It's possible that it's the second one, or I have it marked off incorrectly here. In either case, what you expect is that at some point you're going to get that half cycle low. And this one here, it looks like it's month 19. There was, we had this kind of upper wick and a little bit of a move down. Not much for a half cycle low, but it's still enough to count it. In here, we have the COVID crash, which came and gave us pretty well a half cycle low. It was month 15. And here, it's kind of interesting because we have on month 10, we had actually a swing high that developed, and we moved below the 10-month at EMA or SMA. So it's entirely possible that month 10 here it was the actual half cycle low, or it's up here, and this would be the regular timing band around weeks or months, say 18 to 23. But if this is truly the half cycle low and it was basically an inverted, it came into, I don't know, the half of the half cycle low, then that kind of makes sense if we're expecting a left translated cycle to come in here. So what we know for sure is that we're in an uptrend. We had a strong wick down here, but all it did was really, if you throw this fork on here, it just about perfectly tested it, and now we're already back on the monthly chart, back above.
I like the idea that that's a quarter cycle low on month 10.
Mm-hmm. Yeah, you got to be prepared that you get months on different time frames because they get influenced by their opposite time frames. So if we look at this on the daily chart, this is going to be kind of messy. Got my daily counts here, and some of these, and I'll admit that, like, one of the things, if you're doing cycle analysis, it's always more important to trust your higher frame counts. Some of these counts I'm not necessarily in love with or fully sure about, but like from example here, where we had this kind of potential half cycle low of the monthly cycle coming early, we have what looks like a day 47 low that immediately fails and comes down, and then it sets up another low here. But 47, 41 days is kind of awkward, but 88 days is extremely long. So anyways, I'll move away from the daily chart for now. So back over to the weekly chart, trying to scroll this together. And so when this was breaking lower, I was initially pretty sure that this was going to be our intermediate cycle low. 23 is a little bit early, but we've just had what I thought was a week 32 here. So you get a little bit, if you balance them out, you get 32 and 23, and you just kind of get you get shorter ones that follow longer ones. But it undercut. And what makes me very sure that this is not going to be a cycle failure here is that the third and final way of knowing that you had a cycle low was the break of an upper trend line. So we have the low here, we get a swing low closing above the entirety and the wick of that candle and above the MA10. So I was fairly confident that this was going to be our intermediate cycle low, but we never get final confirmation by breaking the declining trend line. So what do we get? We get an undercut. We get everyone on Twitter screaming. I was kind of shitting my pants a little bit too, if I'm honest. But I went on and I looked at the weekly cycle chart and I'm like, bullish divergence. I mean, the reason you add in divergences is just to give yourself another perspective. You know, what's really going on. If this shows up after an undercut, I typically get more bullish, not less bullish, because it's a sign that we're getting that potential bottom that we were actually looking for before. We just got bullish maybe a little bit too early. And if we go to the daily count here, we have probable daily cycle low, but no confirmation yet. And really, I mean, how many daily cycles do we normally expect before you get an intermediate cycle low? And we normally expect 4 or maybe 5. So this was only the third one. Intermediate cycle low, 1, 2, 3. So it was early in the daily cycle count too. We get a quick into 4, week 28, day 31. This is potentially, it's early because you normally expect daily cycles to last, say, 50 to 60 days with Bitcoin. But when you're going into an ICL, you often get those inversions. So this would just be, if this holds as the low, as I believe it will, I'll change this to DCL and ICL, and it'll just be an inverted daily cycle coming at the HCL timeline. And then, I mean, really from here, we should see price kind of accelerate. We haven't necessarily had the daily cycle low back test yet. So we still could we've closed above the MA10, so I could probably change this to being a daily cycle low here now, but I'll wait anyways. But we should have a back test of the low. I don't know what price that will come at, but you know, we expect within 5 to 10 days. So today is day 4. So sometime between, sometime in the next few days, really, we should see that move back down and then accelerating to the upside.
Yep. Whilst we're here, I want to ask you something actually. I have personally been experiencing for the majority of this cycle that Bitcoin has thrown an unusual amount of counts outside of the window. So do you have any thoughts on that? Is this a perspective you shared or an experience you shared?
I mean, I share it 100% because, I mean, we have 64 into our 4-year cycle low, if that counts. Let's say that was our low here. We come in, and then we had 40 days, which is kind of short, 45 days, which is also kind of short, and then we get this move down, which looks like cycle failure. But this is something, actually, I would say that this cycle in Bitcoin has helped me realize a little bit, is that often you'll get cycle failure into a weekly half cycle low, and then you go higher. And that was always kind of confusing to me before, because often I would see cycle failure, and then I would be getting ready to get a short, because once you fail a cycle, meaning you cross below the previous daily cycle low, you can expect that there will be another low to come, but it didn't happen. So it's something to be prepared for when that does happen. You know, you can't just blindly short or you're going to get wrecked. But yeah, we have a lot of these like intermediate cycles is typically when you get an inversion, but I mean, this is an inversion. That's basically an inversion. You know, 41, that's basically an inversion. 30, that's an inversion. So it's been a real throw. Like, it's definitely changed the way that I've been looking at it, but that's why it's important. This really underscores the importance of trying to buy ICLs, because then you're not going to, if you have time where you can move away from your computer, take a deep breath, go sleep, and think about your position and think about what are the potential outcomes, and let the chart develop some. Like if you had bought right here and you saw this undercut here, you might have been worried, but you know, you breathe a little bit and you can see the price moving back up, and then you can decide what the best choice is for you to make after that.
Yeah, for sure.
Yeah.
And so you are leaning on you prefer the idea that we might be about to force a weekly cycle low here at the hard right edge then, because I'm still kind of thinking that we might get one more rollover, and I think Bob Lucas's preferred count is that we've actually only made a half cycle low and kind of half failed it as well. But I don't know.
Yeah, I mean, when I look back at all these different counts, to me, there's every potential that you're going into an intermediate cycle low and you get that low count. Going into an intermediate cycle low and you get a lower count. I'm
Yep.
into intermediate cycle low, another low count, is it different this time? So I don't know. I think that these kind of moves throws people off because you failed, you've cut underneath, and you have high, lower high, lower high, lower high. So lower highs and lower lows are typically not bullish. But if this instead, so I suggested earlier that we had an inverted um, half cycle low. Month 21, if you're looking back, is like right here. That was 19, correct? This is COVID, so it's a bit of a shock. So I was 15. This is the timing band where you expect that half cycle low of the 4-year cycle. So I have all my original positions. I don't plan on selling them unless I see a real reason to. And that reason has not come up. And when I look at other cycles, I see every reason that, maybe the SPX has topped, but it's going to go to a lower high. It's not going to roll over immediately. At least that's the way I'm looking at it. Perhaps that's wrong. But I see this as being a week 28 low. I mean, weekly bullish divergence. Why am I going to ignore that? And I've used forks in the past. I don't use them that often. Again, there's some other traders that use them, and this is just such a perfect hit here. So I mean, what's the pain trade? Is the pain trade down, or is the pain trade to fucking rip? Right? So
Yeah.
the market's going to do what the fewest number of participants are prepared for. You get a big account like Bob's on there saying, oh, it's likely we're going to get another lower low, which would, if we were using the regular timing band, is going to come, like beginning of September, something like that, another 30 days-ish.
Yep.
So what if instead,
We just rip
kind of
now.
come back here and you just rip,
Yep.
and then everyone's holding their pants. Excuse me. So that's what I think is going to happen.
It's definitely something I'm on
And,
guard for.
yeah.
It's definitely something I'm keeping an eye out for. It's super interesting actually. I
Mm-hmm.
hadn't spotted that these shorter inversions were coinciding with the ICLs. I hadn't noticed that at all. So I've definitely learned something.
Yeah. Yeah, I mean, actually, if I flip open Mara here, look here. This was an ICL back in April, day 20. So it's not untypical. This was the previous ICL, day 29, and for Mara that's kind of short. Here we have you come out of it and you got a short day 23 daily cycle low, and this is another typical area to find inversions. And inversions can kind of show up everywhere, and it screws with you. But like if you're anticipating when you might see one coming into your ICL and coming out of your ICL are often areas when it happens. And Mara is one of the charts that I'm looking at. I'm like, obviously anything can happen, anything can break down. But this chart to me is just, I added this fork recently, so it's kind of biased, but it's so fucking bullish. Like we have a very clear base here and like inverted head and shoulders. We're creating on top of it what looks like another inverted head and shoulders. We broke this essentially yearly cycle inclining trend line, and we had an inversion here, and we've had what could potentially be another inversion right here. So I don't know if you've ever looked at the cycles this way, where you get a no failure followed by failure, a no failure followed by failure, a cycle like that. And so this would essentially be a YCL here.
Yep.
So I like to call it the Irish cycle because it fucks with you. I say that lovingly to Irish people because my background is Irish, but that's what makes sense to me. And even here on this lower low, I mean, this is a higher low here, and this is lower low on price. So that's hidden bullish divergence. And if I look over where I have a Mara Bitcoin chart, so this is Mara against Bitcoin, no weekly count here, but just a very clear, well, I shouldn't say clear, potential shoulder, head, shoulder, measured move all the way up here, getting back to resistance and support. Like the signs, in my opinion, are there. I have, where's MSTR? I have some forks on here. Let me get rid of this potential count. But we have forks meeting right here at the end of September.
Yep.
So if we take this white fork, low, high to low, coming up here, we take this major fork from the previous 4-year cycle, low, high, low, and we meet here at around 400 at the end of September.
Which was 4,000 pre-split, right?
Right. Yeah, I know this. I actually just yesterday had to move all this around.
Yeah.
What a pain. But anyways, so I mean that just says to me, again, we go back to the ratio. We go back to the gold to SPX ratio, and we say, well, maybe this has another move down right into here, and then you get one of these kind of strange shapes where it's like shoulder, mini head, shoulder, and that's your basing pattern, and then it's going to break out.
Yeah.
And so, but first we have to get that move down, which is stocks up, and then therefore Bitcoin up. And at this point, Bitcoin outperformance is what you would kind of anticipate in the late stage of a cycle before a recession.
Yep. Yep.
Yeah.
Interesting. So I got to be. I don't know if you know. I went flat from a trading position, from a trading perspective on Bitcoin. I've still got my core allocation from the lows. That's like a different strategy for me. That's more of a, I try to make 2 trades with that. I try to get in at the 4-year cycle low and get out at the top. That's the strategy. But I make a lot of swing trades on the way up, and I went completely flat because I know a lot of people, they get kind of FOMO-y or whatever, but I'm happy to be quite late to a trade in exchange for confidence. So as it stands, I'm on guard for this ICL or inversion we were just talking about, but I'm still quite open to seeing perhaps a little bit more sideways, another 30 days of. I'm open to both. I'm not going to try to pretend like I have a clue which one's going to form. Having had this conversation with you now, I think you make quite a compelling case that we could be about to force an inversion and a weekly cycle low. So I'm definitely more on guard for that than I was before this conversation. I'll hold my hands up and admit to that. But yeah. I'm looking forward to seeing if we can get momentum return. Obviously, if we get a trend line break, then it should be a pretty clear signal. So,
well, this is another chart that I'll share. This is not a Bressert cycle chart, obviously. It's just noting that every 17 years that there's been some sort of top, not necessarily the top of that cycle, but some sort of top that led to a decline. And so this isn't my idea. Like, if you're like me, the ideas that you come up with are often an amalgamation of other people's ideas. I heard a podcast, I want to say it was back in the fall, and the guy on the podcast was talking about how every 17 years, if you're measuring top to top, you get a cycle top on some level, followed by a decline. And those declines are sometimes severe, like the GFC was 55%, and sometimes they're smaller, like this is like one candle and it's like a 22% decline. But from here we can see that there's an iteration where you get a larger decline. This was, I think, 40% here, and then you get a smaller decline, 20% or 25%. Larger decline, this is 1973, which is maybe similar to what we're going to face here if we're talking about gold outperforming stocks. And this was a larger decline, maybe this was 45, 50%, I can't really remember. Shorter decline, 20%, 23%, larger decline, 50%. So technically, if this is a pattern, shorter, longer, then this one should be the shorter decline where you get a 25% move down or something like that. But if it's going to repeat, if we're talking about, gold outpacing, then perhaps it's going to be this one here where you get 40% down or something like that. But that to say is that 2024 is following in this cycle. Perhaps it's going to change and this will no longer play, and stocks continue up into next year. But from my point of view, it just seems very likely that 2024 is a year where we see the top and we see a decline come in. I know there's a lot of people that follow the 18.6 real estate cycle.
Yeah,
and so they're saying that it should go up into next year based on that cycle. But I mean, every cycle, other than, like, this is a very strict cycle. It's every 17 years. Other cycles that we measure, like investor cycles, we give ranges. Like the daily cycle low is going to be 40 days, but it might come at day 32, it might come at day 43. And so that 18.6, maybe it's 18.6, maybe it's 17.2 this time around, or maybe it's 19.3 this time around. I don't know how accurate and precise that cycle is, but this tells me that we should be on guard this year for that top and not next year.
Very, very interesting. Makes a lot of sense to me as well. I've been quite vocal about expecting a top this year.
Yeah, that makes sense to me as well. But the market will prove us right or wrong.
Yep, absolutely. Do you have any other charts you want to share? Anything else you're looking at?
Um, Oil is kind of interesting. Is this the right one? I don't want that chart actually. Oil, I was looking for it to come into a weekly cycle low in September, but it might be coming early. I have a longer weekly cycle on oil as well. If I kind of condense it so you can see,
Mm-hmm.
it measures and gives an average length with this cycle of around 70 weeks. We go back and see 70, you get these top 70, 71, 80, really long here, 100, followed by a short into 47. So 147 between the two, you get that average in the 70s again, 70, 79, 69, 70, and then 88. So actually, really, this being a low here at 66 with balance, that makes sense. So oil might be forming an intermediate cycle low here, and it's actually higher than this one here. So we may actually get oil moving up a fair bit from here. My initial reaction is for me to expect oil to come down, but it has broken the trend line. Is there bullish divergence here? Maybe a tiny bit actually. So we might see oil start to move back up for the next several weeks. And if this is an ICL, then I mean a few months would be reasonable.
Sure.
So just kind of thinking aloud, like if that's going to be an ICL there, then where's my 10-year yields? Because I mean, if gold's going to go higher, you would expect a 10-year to go higher. So we failed here, but it is week 32. And what did I do? Oh, I must have done this yesterday. Oh, and there is bullish divergence on these lows. So maybe as contrary as it would be, because I think a recession is coming, maybe not yet. Maybe yields are going to work their way up for several more weeks before rolling over later. And maybe that's good for stocks though, because in this drop that just happened, it was on a low DX, like DXY dropped, yields dropped. And so maybe this is going to be DXY up, yields up, and stocks up. So I don't know. It's interesting times.
That's not something I had on my bingo card, if I'm being honest. I was thinking we'd
Yeah.
probably go a lot lower in the yields.
This is okay. This isn't stuff that I have prepared. I'm looking at old charts that I haven't looked at for a while. So this is my JPY, and actually, okay. So this is a pattern that. Who was it that I saw made this pattern? It was a YouTuber that talks about crypto. Might have been the blockchain backer. He talked about this pattern where from a top, you get a 5-wave down. You go 1, 2, 3, 4, 5. A 6th wave that comes up into that 4th wave area and then rolls over into a final wave down. So this cycle count is not right here. It's not 27 weeks. It's much longer than that. And then what that follows is a significant bottom. And when that bottom comes in, now, of course, patterns fail all the time, so there's no saying that this has to play out. But I do recall the way that said that this would typically play out was out of this bottom. Let me find my path. You would get an A, B, C correction for a big move up. So I don't know what that means. I'm not a macro kind of guy. I'm a guy that looks at charts in his spare time and tries to make money. So if this pattern plays out, this is DXY probably getting crushed, right?
Yeah.
This is DXY potentially recovering. Don't look at the time scale here. This is just arrows. So the big upper wick and very oversold. Already oversold after this is how many weeks off the bottom is that? 5 weeks. But oversold isn't bad necessarily. Oversold is often the place that things can gather the momentum to make a bigger move. So we could see an ABC, and that's crushing the dollar further, and not in a good way, right? Because in the past, like DXY is going down, stocks are going up, gold's kind of going up. But in this kind of way, it's like DXY down, yields going down very quickly, JPY going up, and so stocks getting crushed. So maybe this is the trigger. Maybe this is this is going to back off, and we see this kind of ABC correction happening. And then this is what's going to start your initial decline in stocks, not DXY strength, but DXY weakness.
Wow. I'm thinking we're going to get a CPI print this week, right?
Yeah.
Everything I've been looking at points to continuation of CPI coming off. Absolutely everything. And that chart has made me really wonder if there's something wrong with that.
Yeah.
But
how are things going to interact with each other? What do those lows mean? Like, what do they mean? Because well, if you think about it, recently, like this whole rally has been, the Fed's going to cut. Fed's going to cut. The Fed's behind the curve. Fed's going to cut. So, but what if now, if the Fed, maybe they're backed into a bit of a corner where they can't cut? I was reading, I forget the name of the guy on Twitter. I think it's Paulo Macro. He was saying that cutting would essentially, and this makes sense, if they cut rates, that would send the USD down more, send the JPY up more, and kill stocks.
Yeah.
Right? Because that's what's just happened. So if they're going to cut rates, and even though yields are suggesting that they should, that might have a devastating effect. So maybe there's not going to be a cut. So this was the last major low, was February 08, but that was not the high, right? That was not the high of before the GFC. The high was September, so right around here, October, November. So really the last leg down actually here into the 15-year low was not bullish. This was November. Yeah, so around here was the last low. The last low, this is basically an intermediate cycle. You have several months here. So maybe that's where we are. Maybe it's something like that. I don't want the daily chart, not weekly chart. I don't have, ignore all these counts. Sorry, it's gonna be kind of ugly here. Not too far back. Still too far back. Here we go. So this was a monthly low. And then where are we? Right here. So this was the top of the stock market, right here. And then DXY went down further and it wasn't bullish. Came up a little bit and then was not bullish because we had it from here in the GFC. This was the first part of the decline. It was like a 20% decline. And then we have the DXY basing. And then this was the deflationary part where there was like a huge move down where it was like 30%, right? Right into, July 07 or July 08 into November 08. That was I'm pretty sure that's the time of the big decline.
Yeah.
So maybe that's where we are. We're something like this, or we're in the summer still. So we're something like this. We're going to move up and move into an ICL, but it's not bullish all the way down. There's a part where it's going to be potentially still bullish, or maybe we're here. We're setting an ICL potentially now. Where is my weekly cycle chart? Here we go. Weekly cycles DXY. Get rid of this fork. So what week are we on here? This is technically, maybe it's 32, but then maybe it's failed. And this was 23 was the low. I don't know. We're pretty oversold, but it can continue down when it's oversold. So I don't know. This is where I have my 3-year cycle low. And so my thought here was we undercut here and undercut this 3-year cycle low into September. And if we undercut enough and we come down into this range, then all of a sudden we're breaking the trend line from the uptrend line from the GFC. And so this all of a sudden it's not a 3-year low, it's like a 15-year cycle low. Because technically this was 2008. Technically should have been is the timing band if you're looking for exactly 15 years. It was this low. But if it doesn't come here, maybe we're going to move up more first. I'm not sure. It's hard to say. We do have this line that I think needs to be broken at some point, but we could potentially be seeing an ICL come here, which is, even though we've had high, low, and a lower high here, potentially that this is confirming that this is a 3-year cycle low from July, and we're going to move up a little bit here. Who knows how much? Part of that could be bullish for stocks if we're looking at conclusions we've drawn from other charts, and then part of it could be bearish. But maybe it's the decline that is really bearish. So maybe we set an ICL here and it left translate with stocks into the end of September. That could make sense.
Yeah, especially if they don't cut rates, right? If they don't cut rates until September, or even if they're stubborn and it takes them longer, then all the other central banks around the world have already started cutting. So maybe we see the Dixie rise on everything else being weaker, relatively speaking.
Yeah. And so this low here was December, and so the low on stocks in the fall came like up here, like at the end of October. So this was a rally for stocks, but this was also a rally, right? when did it top? Like the first top was March, which is like here. So we came off this ICL a fair bit before they made that first top, and then here in April was where we had that week 25 low, and so now we've gone lower since then. But I mean, there's no to say that stocks can't rally, because I mean they did here. This was a rally point. This first daily cycle essentially was a rally.
Yeah.
So maybe first daily cycle here will also be a rally for stocks. If this is an ICL here, there's no evidence of that just yet. But I mean, from time pan, if this hasn't failed, then you would say, I mean, it's deep in the time pan. Week 32 is pretty long.
Yeah.
For the DXY.
Yeah.
Yeah.
Wild times.
Definitely. But I mean, moving away from things that we're not sure about, the things that we're like, I shouldn't say like certain about, but that seem clear. It does seem more likely than not that SPY has a good chance to move up here. So that's what I'm going to be looking for, and I'd like to go. If it's going to go that way, I want to go long with it. Is the way I'm going to phrase that. But I'm hoping it does go long. It does give me a long to go with.
Yeah, I'm also
today.
Yeah, I'm also hoping for the same thing.
Yeah, I mean, if we're green today, where's my tabs? But if we're green today, I'll look at the Qs. We have a DCL here, and we're going to break through. Like this is, I've this marked off as a daily cycle low. I mean, we're going higher again. I think that's good evidence that this is a daily cycle low at least. So back test should come probably by Monday. I would think by early next week we should have the back test of that low. And what I'll do is I'll look at a 4-hour cycle. I'll time 4 hours to give us a low. So this is the US 100, which I use as my proxy for the Qs. And so the relative timing band for a low on the US 100 or the US 500, if you want to do the SPX, is about 50 hours, give or take. So here we had a half cycle low at 31, and we had a low here, and I got to get rid of this 19. Then we had a final low here. So this one's a little bit longer. How long is this kind of cycle here? So this is pretty long. This is 74, but that would make sense. We went higher, left translated, failed, and this will be short. So we had long, short into a daily cycle low. And so this chart is kind of giving us some clues here on the shorter time frame, where we might kind of come up and then break this trend line to set the daily cycle low back test. And if we see signs that this is turning around again, I'll go long here, because at the very least, I think that we're going to go up until around to day 9, day 10. Like if this is going to be a left translated daily cycle, then days 8 to 12, let's say, is your timing band. So day 8 would be Thursday of next week to potentially into early part of the week afterwards. So we'll have to see, but that's kind of going to be my trigger, using the 4-hour time frame, break this trend line, get into that timing band. This is not 39, I'll just delete that, but get into the timing band here, and then see a move up, and it makes sense that it might come up to this area for resistance and support, maybe 19,450-ish, and kind of go from there. But that would be an entry for me using the 4-hour chart. And my entry would be on the Qs. I trade TQQQ off of this. Once in a while, I'll do some options, but normally just TQQQ is what I use.
Very nice.
Yeah. So, anyways, I don't know if you have any other questions, but
no. Thank you very much.
I have to look at.
Thank you very much for sharing that. There's a lot going on, right? There's a lot going on.
For sure. We'll have to kind of wait and see what happens. But I think that there's positive signs that the outcome that we're looking for with Bitcoin is going to happen. Actually, I have this is a 12-hour chart I do on Bitcoin, which should normally time the half cycle low. I won't bore you with too many more different time frame charts, but I'll use a 12-hour time frame, and 12 hours up now, and so the next low based on this should be 50 to 60 bars. So sometime between, let's see, what's the date here? 30th, 29th of August, and early September would be the next either half cycle low, if this will end up being a daily cycle low, or the next daily cycle low based on that timing.
Yep.
So we'll see what happens. But I'm positive about it.
Yeah, I am cautiously optimistic as it stands, and I've got all my cash is ready to be deployed since I'm currently flat. But like I said a bit
Yeah.
earlier on, I'm more than happy to be slightly late in exchange for a bit of extra confidence.
For sure. There's no reason to go longing and aping into anything when you like, you have your position that you're gonna continue to move with the market, whether or not you have a specific long or not. That's why it's important to buy your major lows and even the kind of the like your intermediate cycle lows. That's when you want to get in.
Yeah, for sure, for sure. Well, unless there's
Yeah.
anything else you want to present, I'll link all your social media in the pinned comment of this conversation so people can find you.
No, I think that's pretty good. We've pretty long conversation. I know my wife and kids are waiting for me to get off the computer, so
No problem at all.
we'll
Well,
give them a little bit of attention.
thank you very much for your time, Andrew. It was really great to talk to you, and I learned quite a few bits today as well, so that was really great. So thank you again. Thanks for your time, and I hope the viewers like it. I'm sure they will.
All right, awesome. Have a great one.
Yeah, you too. Thanks for being here. Cheers. Bye.
Cheers.